What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video we're going to be going over the best indicators for supply and demand setups. Now this is a topic a lot of you guys wanted me to go over, so stay plugged in, man. This is going to be a good one. So let's jump right into the video, man. I don't like to waste too much time. The first indicator, or indicators I should say, I use are going to be moving averages. Now, there are three moving averages in particular that I use. I got this from Doyle Exchange, so shout out to him. It's going to be the 13 EMA, the 200 EMA, and the 50 SMA. Now, how do I use these? The 200 EMA I use for with the trend setups. What does that mean? When I'm taking a demand setup, right, I want the 200 EMA to be below or right at my zone. When I'm taking the supply, I want the 200 EMA to be above or right at my zone again. Simple enough. When it comes to the 50 SMA, I use it for with the trend setups. However, I believe it is possibly even more valuable when it comes to counter trend setups. So don't worry, I'm going to show an example of that. And when it comes to the 13 EMA, it's probably the indicator that I pay the least attention to. However, I do keep it on there because it shows who's currently in momentum in the market. So let's jump right on the chart to see how I would use these. So right here on EU, we have a demand setup, right? We have a gap attached to our zone, plus we have a break of structure here. Simple enough. So it's a demand setup. Where should the 200 be? When it comes to demand setups, I said I want the 200 to be underneath my zone or right at my zone. So in this particular setup, we can see that the 200 EMA is doing just that, is right underneath our zone. So I would be confident to take this setup. I would be in aggressive. Yes, I enter aggressive on most occasions, but however, in this particular example, you know, the break of the candle gave you a better entry than getting in aggressive would, but I would have been in there aggressive. My first TP would have been here at the recent high, and then the second TP, if I was going to hold it, would be at this swing high way over here. So that is a demand setup. Let me get into a supply setup. So for our supply setup, we got GU on the 5-minute chart. By the way, guys, all of my examples that I'm showing you are on the 5-minute chart, but we got GU, man. Where is the 200 EMA in relation to this supply zone? Now, this is a perfect example of what I meant when I said, if it's not above my zone, when it comes to a supply, I want it to be right there at my zone. So it's not above our zone. However, the 200 EMA is right there, right in front of our zone. So in my opinion, this would still be a setup that is in confluence with the 200 EMA. So y'all know me, man, we in aggressive every time for the most part. And stop loss right above the zone or at the breach of the zone. And first TP, now since first TP is way down here, I ain't gonna lie, I probably wouldn't have waited to, you know, take profit way down here. I probably would have took it at this low right here, and then, you know, if I wanted to hold runners, probably try to hold it all the way down to here. But that is an example of a supply with the 200 in confluence. Now, let's get into the example that I really like when it comes to a counter trend setup using the 50 SMA. So for our counter trend setup, man, we're going to be looking at NAS 100 on the 5-minute chart as always. So before I get into the actual setup, let me actually zoom out a little bit because I want to show you guys the conditions in which this would work very well. So whenever we're going counter trend, indicator or not, it is very risky because you are saying, or you're essentially saying, you know, this is the top for a sell, or you're saying that this is the bottom when you're getting into a buy. So it's very risky because you're trying to anticipate and predict the market. But in this particular case, going counter trend with the 50 SMA in confluence makes sense. Why? Because as we can see here, guys, we pushed up very aggressively. Like this whole move, let me see. This whole move was over a 200-point move. So we understand that the market is going to mirror itself. The market is going to correct itself. Very rarely will you see the market just continue to push in one direction all day, every day. So this particular setup, we have a supply. And matter of fact, guys, pay attention to how far the supply is from the 200 EMA. That's another little confluence that you guys could use. But we have a supply here. We've been pushing up, breaking structure to the upside for hours and hours and hours, right? We finally get a market structure shift here, right? And then we get a supply set up right here. Now, this is a valid supply, right? Gap attached to it, and we got a breaker structure here. So pay attention when I play this out to where the to where the 50 SMA is. When we get back into that zone, look at where the 50 SMA is. This is like the setup I showed you guys before, where the 200 EMA was right there in front of our supply. In this case, when we're going counter trend, the 50 SMA is right there at our supply. So this would be a setup, in my opinion, that is valid, is good. I would take it, no questions asked, especially when the stop loss is 2.5 points on NASDAQ. Please, I'll take that every day of the week. First TP could be at this low, but honestly with NAS, I would not just be taking 10 points. I'm trying to hold it, especially going counter trend. I'm gonna hold it and try to fill in some of these gaps we have below down to the left. So this, in my opinion, is a valid, counter trend setup. Now, I will say this, guys, counter trend setups are always more risky. So, back test this for yourself. The reason why I'm so confident in going counter trend on a lot of setups is that I've back tested it multiple times. I know the conditions in which going counter trend is a higher probability. So do your own research, guys, and do your own back testing to figure out what works best for you. At the end of the day, guys, don't listen to what I say on YouTube. Do your own research, do your own back testing, and figure out what works best for you. So that is all we need to know about the moving averages, right? Let's get into the next indicator that I use, and we can just wrap this up. So the final indicator that I use is going to be yesterday's open, high, low, and close. Now let me go ahead and pull this up because I turn off yesterday's open and I turn off yesterday's close. I only care about yesterday's high and yesterday's low. Now, why do I care about those particular levels? I care about those levels because those are levels where price tends to reverse from a lot. So what do I mean by that? Well, in order to understand this concept, you guys have to understand liquidity. So if you don't understand liquidity, go watch my other video that I have on my channel. I made it about a week or two ago, and I go over liquidity in detail in that video. So when it comes to using yesterday's high and low for supply and demand setups, what am I looking for? After I see a sweep of yesterday's high or low, in this case, we're going to be paying attention to yesterday's high being swept. I'm looking for one or two things, right? If we're gonna break yesterday's high, I want to see momentum push through yesterday's high and have a demand setup where yesterday's high is either below or right at the demand, right? Or my favorite is waiting for there to be a market structure shift and look to go the opposite way. Now, this is particularly when it happens in London session, because what you guys have to understand is when it comes to price action, when it comes to a daily candle, okay, most of the time before they sell off for the day, they're going to push up, right? And that push up is going to happen typically in London session, right? So they're going to push up and then start going down, right? And the flip side is going to be when they're going to buy, right? They're going to push down and then push up, and that push down typically happens in London session. Now, like I said, after yesterday's high or low was swept, I'm looking for a market structure shift. Now, what is a market structure shift? A market structure shift is different than just a breaker structure. A breaker structure is we're in an uptrend. Like, let's say this is an uptrend, right? All of these here, right? This is breaker structure, right? When we're breaking highs in a trend, that's a breaker structure. What is a market structure shift? A market structure shift is, let me move over. A market structure shift is when we're in an uptrend, right? And then all of a sudden, right, we break a low. When that low is broken, right, that is what we would call a market structure shift. Why? Because we were making higher highs and higher lows, but now we just broke a low. So market structure is shifting. So what we would expect is after the market structure shift, we would expect for this to come back up to a supply zone, a fair value gap or whatever, and then sell off, right, and start a new trend going the other way. So that is what I like to see when it comes to yesterday's high or yesterday's low being swept. Now let me go in replay mode because I want to show you guys this in detail. So as we can see here, guys, we have swept yesterday's high. All right, yesterday's high has been swept. So now I'm going to be looking for a market structure shift to the downside. So let me go ahead and play this out a little bit and see what happens. Boom. That is where our market structure shift occurs, right? We broke below this low. That is a MSS, a market structure shift. So now at this point, if there was a supply or a fair value gap up here, you could have taken it. But since that didn't happen, and we're focusing on supply and demand in this video, right, we're gonna wait for a supply to form. So playing it out, we can see, boom, there's low-key a supply right here that you could have taken even before the setup I showed you guys. Like, you could have taken this supply, because I'm gonna play it out and you guys are gonna see that price came back to this level. But you know, price came back to this level, to this supply, and you could have taken that. Or you could have waited, like let's just say you wanted to just be extra sure that, you know, price is ready to go down. So, you know, you could have waited for another supply, which you got right here, right? We broke this low with a gap attached to this zone, and all you had to do was wait for price to get back into that zone, right? You can either enter aggressive or wait for the break of the candle. Y'all know which one I'm doing, but we're in aggressive, right? And all we're doing is we could have targeted the recent low. However, like I said, since price had pushed up so heavily before, right, I would be looking to hold to, you know, take out, you know, levels of liquidity down here, or maybe fill in some gaps down to the bottom. So especially like on NAS, like I'm not just taking 10 points on NAS. No, sir, absolutely not. So you could have gotten aggressive and you could have held to, you know, other levels of liquidity, like trying to take out, you know, some lows looking to the left, right? Maybe you wanted to take out, you know, yesterday's PM session low, or, you know, whatever you were looking for, right, as far as your TP goes. But, you know, you could have taken this setup and this would have been beautiful. Like, I was going to move on to find a different setup until I saw that this price action right here, this setup was literally, you know, perfect for explaining how to use yesterday's high and low when it comes to your supply and demand setups, especially when you got the 50 SMA in confluence with you, like we did on this particular setup. And as you can see, guys, once liquidity gets taken, you get that MSS down, right, and you start breaking structure to the downside, or on the flip side, you know, you start breaking structure to the upside for demands. After taking liquidity, you can see that, guys, price just takes off in the other direction, and you know, you could have been up big, you know, on this particular setup. So those are the two indicators that I use. The only other indicator that I use is going to be a sessions indicator, but like I said, I don't really use a sessions indicator. It just kind of helps me, you know, see what happened in London session, and, you know, see what's going on in New York session as far as, you know, price action goes. But those are the only two indicators I use, and I guarantee you those are the only two indicators that you need. Like, I just want you guys to go back test this, right? Go back test using these indicators that I talked about. You know, go back test seeing when the 200 is in confluence, right? When the 50 is in confluence, going counter trend, right? Or when you're using yesterday's open, high, low, and close, right? When you're seeing sweeps of liquidity at the high or sweeps of liquidity at the low, you get that MSS going the opposite direction. Like, go back test and see, you know, the success rate of those. I've back tested it. That is why I am confident in taking these types of setups on a daily basis. But I hope this video helps you guys out, man. I hope you guys learned something new. As always, my goal is to break things down in the most simplest way possible, where anyone can understand, and I hope I did that in this video. But if you got any questions, leave them down in the comments, man. That's all I got for today's video. I'm gone.